Everyone stick with us versus herd. If it's your first time here, you like the content, hit subscribe. If you haven't yet subscribed to our options trading live channel, link is below in the description. I go live pre-market and after market close. And if you want to join the UVH fam, links are below in the description as well to our Discord and our free options trading group on Facebook. As you can see right now, futures are red hot. S&P's up 18, Dow's up 164, NASDAQ is up 63. This is going to be sort of like a watch list slash covering what trades I have on right now. So don't have a lot of trades on right now. I've kind of scaled back risk due to the coronavirus and just been kind of dipping my toe into the S&P futures. I've been making some money in there. Nothing crazy, but pretty much rinse and repeating 30-40%. And looks like right now, because of that rip in the S&Ps, I'm currently at 41%. I mean, these are small positions. I'm just dabbling a little bit. I didn't expect it to be up that much. Obviously, if I did, I would definitely have bought more than the two contracts that I did. Right now, I was trading the 33.50s for the 33.30s for this week. I moved out to the 33.55s for 11 days out. Just trying to capture the move. Right now, this is actually moving up 46% now, but the S&P futures are hitting the top of this range here. So it's going to be interesting to see what happens here at 32.67. So I've been day trading the S&P futures a little bit and just playing a little bit because I haven't really been trading that many stocks. Right now I am in Google earnings. Google had earnings today. They missed a little bit. They had good EPS, missed on revenue, and now it's at 14.22. I have an iron condor on that, which I think I'm going to get out live. I'm definitely not up 100%. It was mainly the reason why I showed this because at close there was a misrepresentation of what the options were going for, and the numbers are all over the place. But basically, I need to be between 1380 and 1580. So I needed to be above 1380 on the put side. I did sell them for this week, so I have an iron condor on. I did get a, let's see here, I think it's a 155 credit. Yeah, I got a $1.55 credit for it. So I'm looking to see if Disney's going to get a bounce up. I think that tomorrow morning with the futures like this, I think that Google may open around the 1450 area. It came all the way down to 1398, which is kind of getting close to the bottom of my range because I needed to be above 1380. If I go up to 1450, I'm going to be collecting most of that premium tomorrow. Even at 1422 is relatively good. We were expecting on Google, I think it was an $89 move $89 move, and it currently moved down from 1475 down to 1422. So we're at just above a $50 move right now on that, which was pretty much just giving back the gains that it had. It had a $49 move intraday, then after hours were down about $50 or so. So Google, so I was very neutral on that due to the run and how much it went up. We had this massive run since last quarter, and due to how much it went up intraday, it went up $50. I figured that it was a good time to sell a nice wide iron condor on that. I had a 100-point spread to the upside and a 100-point spread down to the downside. Looks like the S&Ps are getting rejected here right now, still up 36%. So we'll see what happens here as I'm talking. I'm not gonna be closing on any trades while I'm doing this video. I'm just kind of going through it right now. So I'm watching the S&Ps. That's where I'm kind of looking at on Google. So I do think that I'm gonna get out alive in this. When you see something come that close to your strike, sometimes you just don't know. Now tomorrow we have the earnings for Disney. And I'm talking about after close earnings for Disney, Snap, and Chipotle. And I'm currently in on Disney. So I have been trading Disney a little bit here since last week. So let's bring up Disney. So Disney, I initially put on an earnings trade on, what day is that? It was on Thursday. So last Thursday I put an earnings trade on. I bought the 140 call. Probably should have kept it because that 140 call for next week, what is it going for right now? 550, 530. I sold it for 340 on Friday just because I wasn't sure what was going to happen over the weekend with the coronavirus. We had a lot of fear, and On Friday, Disney only went up 50 cents, but I was up 60% on the option due to the implied volatility spike. So this morning I did get into the 143 call, but for this week, and it's currently up 16%, so I'm up $52 on that, just a small position. On Disney, right now it did run up to like 142.49 after hours, currently at 141.95. So we'll see what happens. We'll see what happens with Disney, but I think that if it's going to go above, I think what's going to happen with Disney tomorrow is that it's going to make a run. People are going to try to run it up to like 145, I believe, tomorrow. So if that's the case, if they run it up to 145 tomorrow, I'm probably going to take that call off, take the risk off, and then switch to selling some premium, because you can see here, as implied volatility has spiked, the options are getting a lot more expensive. You know, I was buying options right down in here when implied volatility was decreasing, and that's why when the stock price wasn't increasing, but the option pricing was increasing, it was due to the spike in implied volatility, and it went even higher today. So that's another reason why we're making more money on those. But you have to understand that after earnings, we're going to have an IV crush. It's going to crush those options. You know, if it goes 150, 155, I mean, no problem. But if it stays the same, you're going to be in trouble. And yes, it's very easy to gamble with earnings, but what I like to do is just reduce risk and redeploy my capital. Reduce risk and redeploy my capital. You know, and you know, sure, you can have massive earnings, you know, on like Amazon and Tesla and all that stuff. But for me, I could obviously have left the 140 call, made more money. I could leave the 143 call. If it goes up, make more money. But why leave your profits at risk like that? You know, just take the money, redeploy your capital, and move on up from there. You know, so that's my plan. I think that if it runs to 145 tomorrow, I'll probably be taking it off. Even if it probably even runs up to 144, I'm probably going to take it off and probably switch to selling some puts. I do think that Disney's going to have a pretty great earnings tomorrow, and I think that with the Disney Plus numbers and the hype that they had over the last quarter, I think it's going to be good. Only bad news is with Shanghai Disney being closed, we're not sure how long that's going to be closed for, but it seems like the fear and the panic of the coronavirus has really dialed back, I would say, you know, over the weekend and today. We really haven't heard that much about it. And, you know, so compared to the weekend prior, we heard it was all weekend long was about the coronavirus. So this weekend scaled a little bit back. Fears are kind of dwindling a little bit, I think. And I know that in China, they're testing out a vaccine for it currently. The other thing to be aware of is the Iowa caucuses are happening right now. They haven't said anything about who's winning or who's pulling ahead. I think I haven't really looked at all the numbers because I don't want to get too invested in that. I just want to see what the end result is. But that is happening currently, so that's going to be interesting tomorrow. And then we have the factory orders at 10 a.m. Eastern time tomorrow as well. So that's kind of the game plan right now. So right now I am babysitting Google, the S&P futures, and Disney. So I have a game plan for when to get out tomorrow on Disney. I do think that Disney's going to run up to 145. I'm going to try to take that trade off, redeploy some profits, and hopefully take in most of that credit on Google. I wish I did more, but I wasn't sure. Well, you know, I wasn't sure on Google because Google was dipping down to $13.98 here. Because I definitely think on Google, you know, this could have broken. It did break 1400. This could go down to 1350 quick because there's not really any support up in here. But if it went up, you know, it could definitely have blown the lid off. So, you know, if tomorrow it opens up flat or like 1450, I think would be best case scenario. For me, for selling premium. For people that bought premium, I'm sorry, it's still within the expected move. Hope you're able to get out, and that is the risk going into earnings. Whenever you put on an earnings trade, you have to understand the risk of what that trade is doing. I'm also taking a look at Twitter this week. Twitter has earnings, I think, on Thursday. Yeah, Thursday before market open. So tomorrow, or Wednesday, I'm going to be looking at something on a position on Twitter. I am probably looking to go short on that. Had a disaster quarter last quarter. It has been ramping up, so I am looking for it to come back down to like 30 or 28, revisit the 52-week lows. So we'll see on that. I may not get in that, just kind of an idea of what I'm planning to trade right now. And then I'm also eyeing Boeing. I'm not doing anything with Boeing. I'm just kind of seeing where it's going to go, seeing if it's going to stabilize around here, like the 310 or 315 area is what I'm looking for. But right now, futures are on fire and keeping an eye on that. I'm probably going to close my position tonight, reopen another position tomorrow on the S&P futures, and move on from there. So if you could do me a favor, if you enjoyed this video, hit the like button, comment below if you watch this video to the end, and let me know what you guys are trading, how you did today. As always, stay safe, stay green. It's us versus herd.